So how exactly should you invest in your Fidelity Roth IRA account? What's up you guys? Welcome back to the Average Joe Investor channel, and in this video we are talking about Fidelity Roth IRA accounts and more specifically how we should invest in them as the average Joe. In this video I'm going to share with you exactly what asset allocation means with respect to investing in your retirement portfolio. We're going to talk about some of the important elements that need to go into your decision for what investments you choose, and finally I'm going to show you exactly what I own in my own Fidelity Roth IRA account and the process by which I found those investments on the Fidelity website. You guys know how much I value you as a member of the audience, and I never ever want to waste your time. Furthermore, I really want to deliver massive value every time I jump in front of the camera and make a video. So without further delay, hit that like button, hit the subscribe button, and let's get started. Hey guys, before we get started, make sure to hit that subscribe button below the video to ensure you do not miss any future videos I post. Make sure to leave a comment below saying you subscribed, and I promise to respond personally to your comment. Alright guys, let's go ahead and jump right into the content here. The first thing we want to talk about is asset allocation. Now your first thought might be, what's asset allocation? Essentially, what this means is the mix of different investments you have in your portfolio. And really, it can all be boiled down to how much is in stocks, how much is in fixed income or bonds or bond equivalents, and how much is in cash. Those are the three main asset classes that are in most portfolios. And within some of those categories, you have subcategories. For example, with stocks, you have growth stocks, you have dividend stocks, you have small cap, large cap, mid cap, you have United States versus international, and there's other categories we can talk about as well. So when we talk about picking investments for your Fidelity Roth IRA account, we really need to understand what is our asset allocation going to be. We really need to know two things, which is your goals and objectives for the money, and secondly, what is your time horizon? All right, so first thing here, goals and objectives, right? So this money, we need to understand, what do we want it to accomplish? Is this money that we intend to live on when we are in retirement after age 59 and a half, or whatever age after that point we want to retire? Is this money we want to retire early with and be part of the FIRE movement, right? Financial independence, retire early. Making sure we have very clear goals and objectives with the money we're talking about is a really great first step to picking our investments. Second big thing we need to consider here is your time horizon. When do you need the money? And I'm gonna just come right off the bat here and say, if you need this money in the next 2 to 3 years, what on earth are you investing it for? The truth of the matter is the stock market over the long term goes up. History and facts and data tell us that over the long term, the stock market is going to go up. But along the way, it's not straight line growth. Along the way, it's gonna be up and down and up higher, and then down below and up and down along the way. And you could find yourselves in a situation where you really need the money and it's down right now, and that's a problem. So when we think the stock market, we need to think long-term investment. If you need the money in the next few years, the best place to put your money is in a savings account. Now, how does that apply to someone like me, the average Joe out there? And I do really feel like I'm a good representative example of the average Joe out there. I'm married, I have 4 kids, I own my own house, and I'm 34 years old. What does an asset allocation look like for me? Well, the first thing we have to talk about are my goals and objectives for this account. It's a Roth IRA account. And what that means right off the bat is I'm not going to touch this money until at least age 59 and a half. Now, it is true that because it's a Roth IRA account, I can access my contributions into this account at any time. Tax-free, penalty-free. It's money that I contributed after tax, so I can access it at any time. But the goal for me is to build up a portfolio that I can access in retirement. I'm not going to touch this money for 25 years. That's an important consideration for how I'm going to choose investments for the account. So number 1, the goal is to maximize the investment for retirement. And number 2, I've got 25 years until I need the money. So given that information, let's take a look at my Fidelity Roth IRA. I'll show you what I'm invested in right now and how I came to those conclusions and how I ended up making those decisions. Let's go. All right, guys, here is my Roth IRA account with Fidelity. Let's go ahead and move into the positions. I'd actually moved my Roth IRA over from M1 Finance just to be with Fidelity. And the primary investment at the time had been the Vanguard Mega Cap Growth Indexed ETF, MGK. The portfolio is now made up of 4 different holdings, and 3 of them are with Fidelity, 1 of them is with Schwab. So we've got here the Fidelity Zero International Index, the Fidelity Mid Cap Index Fund, the Fidelity Small Cap Index Fund, and the Schwab Strategic US Large Cap ETF. What that essentially boils down to is a 4-fund portfolio. A large cap index fund, technically an ETF in this case, a mid cap index fund, a small cap index fund, and an international index fund. You guys might remember recently I did a video about 6 different Fidelity index fund strategies for the average Joe. And this one really focuses in on one of the strategies I mentioned, which is a combination of large, mid, and small cap index funds. Although I'm actually adding in an international fund. It's not been a big concern for me in the past, but I did want to bring in some additional diversification with international exposure. The actual asset allocation I went for here was 30% large cap, 30% mid cap, 30% small cap, and 10% international. Now, essentially from an overarching perspective, you can see here it's 100% equities, no fixed income, no cash. And there's a reason for that. I'm 34, like I mentioned, I've got 25 years to invest, which means that I'm not concerned about risk at all with respect to losing money, because I don't need the money, and I only lose money if I sell my investments. Now remember here, I am not a licensed financial advisor yet, so I'm not providing you financial advice, and I don't know all the specifics for your situation, so I can't ever provide that advice, even if I was licensed. I don't know what's going on in your life. Just as a quick reminder, guys, in about 3 to 4 months, I will be launching my financial planning firm, and if it makes sense, I'd love to work with some of you guys. That'd be awesome. But right now, just know that this is not financial advice for your specific situation. So if you're somebody similar to me, where you've got a lot of years to invest, then risk shouldn't be a significant concern for you because you don't need the money anytime soon. And if your investment objective is to maximize your portfolio rather than protect your principal, which shouldn't be a mindset right now because we have so long to invest, then a 100% equities portfolio might make the most sense for you. Now, I mentioned to you 30% large cap, 30% mid cap, 30% small cap, and 10% international. That's the allocation I wanted to go with, but I still had to end up picking investments. So let me just show you here in the Fidelity website, what we can do is we can go to research. So let's say we wanted to find a large cap index fund to use. We can go to news and research. Let's go to mutual funds. Don't worry, I'm gonna bring in index funds and ETFs here shortly. So we're here with our mutual funds research here. So what we're gonna do first off is we're gonna choose index. We're also gonna go by class and category, and we're gonna switch it to US equity, and we're gonna go to large blend, okay? We've got 21 matching funds. We've got a little bit more here in just a second. We're gonna say include ETFs, because I'm open to ETFs, because I can buy them from any company. And then what we'll do is we'll also go to the expense ratios, and we'll come down to expense ratios, go to net expense ratio, and we're gonna choose from 0 to 0.05%. Now, given that criteria, we've got some options available. And what we're gonna do is we're gonna look at this historical growth. We also have the expense ratios over here, and we can take a look. I'm not interested in a year-to-date best return or 1-year return. I'm looking for longer term. So if we look at 5-year return, we can see here we've got some options. We've got Vanguard, we've got Schwab, and I'm sorted by 5-year right now. I can sort by 10-year. If we sort it by life of the fund, we've got a lot of options here that don't have 3, 5, or even 10-year returns. Let's go back to 10-year returns sorted here. And ultimately, the one that I chose, like I mentioned, was Schwab. You can see here the Schwab US Large Cap ETF SCHX has a 10-year return of 13.95%. And just so you know here, that's an average return every single year. So on average, every single year for the past 10 years, it has grown by 13.95%. And for the life of the fund, we're at 14.9%, whereas we're only at 10% here for ILCB from iShares and VV from Vanguard. So I'm not saying these are bad funds and that you shouldn't invest in them, but I've also got a lower expense ratio with Schwab than Vanguard. So ultimately, I chose the Schwab US Large Cap ETF, SCHX. You can also see right down here with Fidelity 500, also a great investment here. 0.015% expense ratio, which is less, and it's a pretty good return. The reason why I didn't choose an S&P 500 ETF or index fund is because I like the idea of a large cap, because there's no specific or strict criteria that it has to be part of the S&P 500. And there might be opportunities to pick up a stock as part of the large cap index fund that is not part of the S&P 500 yet. A great example of this would be Tesla. Tesla should have been part of the S&P 500 because it was large enough, but it didn't meet all the criteria. So as a result, those large cap funds and total market funds out there were able to pick up Tesla and include it as a meaningful part of the index before the S&P 500 index funds were. Any of these top 5 or 6 different investments would be a great fit for you potentially from a large cap perspective. It's just that for me, I decided to choose the Schwab Large Cap Fund, SCHX. Now, along the same lines, I did the same review for the mid cap and the small cap, and I'll show you how I came to my results as well. Let's go ahead and pop over here. We'll change the fund type. We'll go from large blend. We went US equity. Let's go ahead and scroll down here. We'll switch that over to mid cap blend. Now, I could have chosen an extended market index fund or ETF, but I just instead decided to go with a separate mid cap and a separate small cap, just because I wanted to make sure I got an equal amount of exposure to both mid and small cap funds. Same idea here. I've already got all the same criteria with the expense ratio. So then if we sort here by 10-year return, I could have gone with Fidelity Extended Market Index Fund, FSMAX, which does have some great numbers here. But ultimately what I ended up going for with respect to the mid cap is I went with the Fidelity Mid Cap Index Fund, FSMDX. It's got a really great expense ratio of 0.025%. Lifetime return 14.6%, 5-year return 14.67%. It doesn't have 10 years of returns yet. That's how I chose my mid cap fund. Let me show you how I chose my small cap fund. For the small cap funds, you can see here, same criteria. I ended up going with the Fidelity Small Cap Index Fund, FSSNX, one of the top holdings here. It's got the lowest expense ratio of all the top ones at 0.026%. 1-year return is 94%, which is in line with some of these other ones up here. It's got a 3-year return of 14.88 and a 5-year average return of 16.51. Again, that's every single year on average, earning 16.51%. So that's how I chose my large, mid, and small cap index funds. I'm not necessarily saying that you should choose the exact same funds because your specific situation could be completely different than mine. This is just how I came up with my asset allocation for large, mid, and small cap. Now, I also had international. Let me show you how I came up with the international fund. Coming back over here to the screening criteria, let me come up here, let me get rid of small blend, and we'll switch it over from US equity. And we're gonna flip it over to international equity. Same criteria, otherwise we've got the low expense ratios, and you can see here, not a lot of options available to us, but the one that I ended up choosing was the Fidelity Zero International Index Fund, which is known as a zero expense ratio fund. All the other funds here had at least an expense ratio of 0.035%. I could have chosen Fidelity International Index Fund, but I went with Fidelity Zero here. It's got a year-to-date return of 5.89, 1-year return of 50.79%, and life of the fund is 8% here. Just know that it only has, this fund was created in 2018, so it doesn't have a significant historical track record. So that's how I came up with my investment strategy with my Fidelity Roth IRA, guys. Make sure to leave your 2 cents in the comments below. Let me know your feedback here, what your thoughts are on my investment choices, and just if you have any desire at all whatsoever to learn more about what it would look like to work with my financial planning firm in the future. Again, I don't have one right now, but it's in the process of being set up here in the next few months. If you have any desire to learn more about what that would look like and what financial planning would look like for you, and you want to be kept up to date with updates with respect to the launching of my firm, make sure to comment below financial plan, and I will make sure and leave you some contact information to get you set up on a recurring status update. That's all I got for you guys in this video. Have a great rest of your day. Happy investing for the rest of this month, and please continue to stay healthy both physically and financially. Have a good one.